Hello, everybody. Big thank you for being here. Appreciate you all. Thank you to the mods. Thank you, Glenn and St. Jude Needs Us and everybody else. Trying a little new mic position, trying to get a bit closer. So let's just go. Today, we're going to talk about a whole bunch of stuff. We answer the top questions of the week from the community. And this week, it's actually quite philosophical in some ways. So let's just jump in. And this, of course, is never investment advice. It's always just edutainment. So the first question is from maybe this Willie Wehi. How do you see Bitcoin going over the next few weeks? Dropping again to around 21K. So this is a tough one. And everybody's asking the question, should they wait to buy when the next dip is going to happen? And I think I covered this yesterday. So this is the way I see the world. We are basically in that ascending channel. We're going up gradually, a little bit of volatility about an hour ago. Great time to do a little sniping action. I think Bitcoin moved $700 in a few minutes, and Solana didn't move $700, but moved the same percentage as well. So again, I see us oscillating up and down. The question is, will we stay above 21K? It looks very much like it at this range. I see a high as well of about $28,500 over the coming weeks, where we'll meet some very stiff resistance. So we're moving up, but we are not out of the woods. And it's kind of interesting how Bitcoin has been sticking above that kind of 23.5, 23.7 level, hovering around 24. It hasn't come crashing down like in the past. So the last oscillations up, down, up, down, up, down, up, and it's staying up. So we'll see. But be ready if there is a dip. Not financial advice. Next question is from Daza. If you won the lottery, $1 billion, that would be nice. Given inflation and recession, would you take the lump sum, hold the appropriate tax portion, and deploy capital into Bitcoin, various L1s, real estate, etc., or take the annuity and DCAs to receive payments? So that is super interesting. And $1 billion is a lot of money. And I won't say specifically what I would do, but I give you examples of what you should do in this type of situation, I believe. First of all, $1 today is worth more than $1 tomorrow. This is an old chart I used in the past, many years ago, when inflation was not as high as it is now. And back then, you could typically earn 5 or 6% on your money. So the question is, would you want $9 million now or $15 million in 10 years? And the answer is very simple. $15 million is less than having 9 million right now. If you had 9 million now and got 6% per year, you would have 16 million. But the other way to think about this as well, very important, as you've all learned, is manage risk. So basically, there are two big risks that come in waiting for your money: is the return risk, like what would you get on your money, and the time risk, will the money be there over time? So sometimes it's better to have the money up front. And of course, no animals were hurt in the making of this photograph. It's just to manage risk, wear a helmet, be prepared. Now, a lot of people also believe this is a generational opportunity to buy the market. In fact, we've missed it. I think the S&P 500 is up 13% from the bottom. But this is a newspaper headline that I just pulled this morning, and the market slide offers generational opportunity. Buy FANGs and NVIDIA. No, I don't believe in FANGs at all, but I believe in Manta, which I covered last week, I think, which is Microsoft, although I don't invest in Microsoft or Apple, but NVIDIA, Tesla, and Alphabet, I do. The NTA of the last 5. So that would definitely be better than waiting 5 or 10 years, because these companies will do extremely well over the next 10 years. And you're getting them now at a big discount as well. Finally, before I wrap up, what is $1 billion in 10 years in terms of real purchasing power? And that is the year 2022, you get $1 billion. This does not assume anything about taxes or anything else, just straight cash. But by the year 2032, based on historical purchasing power debasement, which is 14%, you will have about $389 million in the ability to buy value, of course. Now, you did hit on a couple of key things like buying real estate. That is a very good inflation hedge. But if you just bought Bitcoin, now, I don't want to sling any hopium here, but again, ignoring taxes and assuming my bear case scenario for Bitcoin price in the year 2030, not the year 2032, This basically, my bear case is 576, 389, and that is a 2,300% return on investment from where we are today. If you had $1 billion, that would turn into 41,000 tokens, which in my bear case would be worth $24 billion in the year 2030. And that is a 25x from here. And a lot of people will ask, well, what happens to MicroStrategy if MicroStrategy still is around in 2030? And that means the market cap of MicroStrategy will go to at least $75 billion, assuming they don't buy any more Bitcoin. That's a 25x from here, and the stock price will be about $7,100, $7,200. So that's where we are. And that is also a 25x, which is the same as Bitcoin because it is a pure Bitcoin proxy. So fingers crossed. But remember, there's always a chance that things can go to zero. And if somebody did hand me $1 billion today, I would diversify. I'd be in, a chunk in Bitcoin, maybe 20%, chunk in cash generating real estate, and a chunk in FANG stocks. And I would not hold any treasuries. And that's it. So interesting question. But always remember, the key message here is take $1 today. Don't wait for the future because of all the risk. And you can make a lot more investing yourself. So next question, sub 14. This is really the deep one, a philosophical one. And I've been thinking about this for 2 days because I have kind of a mind map with about 45 different life lessons, but I took my top 3 out. And but per sub 14, what are the 3 best life lessons that you have learned so far? Ta-da! So let's go. And these also, they apply to me, but they can apply to everybody as well. So first of all, I call it unleash the beast. So the common denominator of success is informing the habit of doing things that failures do not like. Okay. So from this, learn from good habits. And most importantly is number 2, never make the same mistake twice. So again, wrap your head around that. Be the better person, perform and practice good habits over and over again. Stay away from bad habits. Okay. That helps you avoid failure in general. That is probably the most important lesson. Number 2 is rebuilding, which many of us have to do right now. And there are so many examples of this. And this is actually, the first line is from George Soros. Love him or hate him, he's a wise man. And the worse, he said, the worse the situation becomes, the less it takes to turn it around and the bigger the upside. So loose translation is some of the things that I use a lot is get in early, get in hard, obviously do your own research, do your work, do your homework, but you got to beat the posse before you jump in. Sometimes you also have to run into burning buildings, and we've seen that a lot lately as well. It takes courage for people to go and buy the dip because they hear so much about it going further down and nobody wants to catch a falling knife, but sometimes you got to risk that. And remember also, markets go up more than they go down, but similar to what we discussed earlier, this is a very good buying opportunity, not financial advice. And there are so many examples of this. For example, Amazon 20 years ago, Bitcoin a few weeks ago, Tesla 3.5, 4 years ago, et cetera, et cetera. So the worse the situation becomes, be brave. And it's much easier to turn a bad situation around when it's actually a really bad situation. So that's a little bit of positivity there. Not hopium, real life experience. And number 3, probably the most important thing is legacy. Why are we here? And I firmly believe your legacy is a personification of how you lived. So be kind, do good, and of course, leave that legacy. And there's a lot of people as well right now who are, they've had some adverse life experiences. It turns people very bitter, angry, toxic. But I use adversity to become a better person. So again, live your legacy and really focus on touching other people's lives. That's my focus. So brilliant question. Very deep. And they are my top 3, but there's a lot more. So if you guys want to see the rest, let me know. MX3. What is the best crypto exchange with no KYC? That means know your customer, procedure, or option at all. Only crypto and no fiat on-ramp and leverage trading. So that's a bit of a mouthful, but we know the answer already. And basically, Uniswap hits all your criteria. It is the most successful AMM, which is automated market maker. And price discovery happens through the constant product market maker, which is very important. There's no KYC, no login, no questions answered or asked, no questions asked. And it's and only crypto and no fiat on ramp. Simply connect your Web3 wallet. Boom, and you're off and doing business. And watch out though for limits and risks. And there also could be some regulatory risk, protocol risk, and liquidity risk. So just be careful. Don't, as we always say, have all your eggs in one basket, but use it to dabble and trade as you go forward. So great question. And follow on from that, a lot of people are interested by my video on Thursday, which I'll stick here somewhere. But I did a deep dive in a whole bunch of cryptos that some of them I rarely ever talk about. But the question from Dermo221, is Uniswap a good crypto to consider as a solid DeFi platform service considering recent events and upcoming ETH changes? So again, a quick recap and a little bit of a deeper dive as to what I covered on Thursday is, first of all, it's very clear that Uniswap is by far the biggest DEX. It does a truckload of volume. Number two is PancakeSwap or Curve, depending on how you measure it. And here, this is the DEX volume over the last 7 days, which is a metric I like to look at. And you can see very clearly that the next biggest competitor, Curve, only does 18% of the 7-day volume that Uniswap does. Then there's Dodo, SushiSwap, Balancer, etc. The rest really don't matter. The further you go down, the riskier it is. So Uniswap is definitely a safe place to be. It's the 800-pound gorilla in the space. Now let's talk a little bit about the Compendium rating. One of the things I do not like, the crypto Compendium score is 5.8, which ranks about in the top 58th percentile. And it is pretty good. The only thing that is not that good is inflation remains above 31%, which is what dings it. That brings about a lot of price suppression. But from other factors, it actually does quite well. And but that kind of disqualifies it from my perspective as an investment. Now, Uniswap daily transactions volume, I did cover this. You can see here they've been steady during this bear market, only down 8.7% compared to the previous quarter. And this is a relative success considering what has happened in the marketplace. In addition, regarding the ETH news and how ETH is running, yes, I think move to proof of stake will make it a little bit more effective and efficient, will help price action, etc. But this is something that people thought was really going to take off when Uniswap was launched on Polygon. People thought that would eat a lot of the Ethereum-based launch, but it didn't at all. So you can see here, Uniswap feature on Polygon is the second most popular, but the logic is clear, obviously. You think it would get a lot more share of market considering the fees are much lower transaction fee, but it's not taking that market share right now. So we'll watch this carefully. And Ethereum fees have also come down a lot, making it more acceptable to use Uniswap. Now let's do this one other quick analysis. And this is me comparing Uniswap to TradFi exchanges. That's how I do a lot of my valuation. I see, well, what would it be worth in the real world? So I pulled up NYSE, New York Stock Exchange, NASDAQ, Coinbase, and Uniswap, took their market caps, took their revenue, and divided market cap by revenue and got different ratios. So you can see here that Uniswap at 6.7 is the most expensive, using that very crude metric, and Coinbase is actually the cheapest. There you go. But things like NYSE and NASDAQ are actually very profitable. And Coinbase could be running into profitability problems and revenue growth problems next year. That's why it's getting dinged, apart from all the other bad news and press that it's getting. But with that, considering the growth of DEXs and the popularity and how they've survived and thrived during this bear winter, I think the future is very bright for Uniswap. Now let's look at the chart real quick. Again, DEXs, I believe, are the future. We are 81% off the all-time high, down 54% over the last 12 months. The question is, could Uniswap do a 3x from here? And I say, yes, it could. But are there faster horses? Yes. And will inflation cause price suppression? Yes. But could this 3x? Yes. So that's just my simple analogy. I don't own Uniswap. I did last year, but not anymore. So with that, let's go to the next question from Harry B. Regarding Coinbase and the saying, not your keys, not your crypto, what about Coinbase Wallet? Is that a safe option? So first of all, congratulations for looking into self-custody, self-storage of your crypto. Very important going forward. But first, do not confuse Coinbase Wallet app and the Coinbase app. And people do get confused. I think is the same thing. So the Coinbase Wallet app is separate standalone app that allows you to custody your own crypto. It's basically your typical hot wallet, similar to Trust Wallet, MetaMask, Phantom, etc. But with the Coinbase Wallet, you hold your own private keys, which are stored on your device and not with Coinbase. And that seems to many to satisfy the not your keys, not your crypto saying. But beware, there are a few things to watch out for. And that is the following. When you read the information, so for example, it is better than leaving it on the exchange. A little bit of fine print I will read here. The Coinbase Wallet app is a separate standalone app that allows users to store or custody their own crypto. You do not need a Coinbase account to use the Coinbase Wallet app. And Coinbase Wallet helps users manage their own private keys and store their crypto assets directly. So far, so good. It looks okay. But this is where the red flag comes in here. So the app generates a 12-word recovery phrase, yada, yada, yada. Coinbase will never have access to seed. This is all good. But the red flag here is as follows. First, the wallet has a feature that creates an encrypted backup of your seed and stores it on Google Drive and iCloud. Not good. This is a red flag because Google Drive and iCloud are not private at all. And these companies can easily be compelled by authorities to hand over your data. And remember, the FBI, etc., is already getting data from Coinbase about depositors and many other exchanges too. They have to comply. It's not their fault. Also, I worry about how Coinbase performs the encryption for backup. So the key question is who controls the encryption keys, etc. Now, the second issue, it does not seem like this wallet is open source. We could not find any source for the code on GitHub, which means you're using the wallet. You'd have to trust that Coinbase hasn't built in any backdoors in the app, etc. So red flags galore. Net, there are better hot wallets out there. So hope that helps. Next question from Maya Evo. I've heard you say do not hold more than 10% of your crypto in one place, including cold wallets. Is it possible to hold so many wallets and phrases without significantly increasing the probability of error and therefore loss? Very good question. So first of all, how seeds work. Let's dig into this for a few seconds before we jump into the answer. And do as much as your technical abilities will allow. Don't feel compelled to use multiple seeds and wallets if you don't feel comfortable with your own abilities, because the worst thing you could do is make a mistake and lose your crypto. And remember, 4 to 5 million Bitcoin have already probably been lost, much of it due to little mistakes like this. Now, having one seed is enough. You don't need different seeds. This way you can focus on securing and backing up this one seed as best you can. Remember, a seed can generate as many keys as you could ever use. So you don't actually have to have multiple different seeds in order to use multiple different keys and wallets. And a seed is like a keychain that holds all your keys. So since you can create many keys, as many as you want, you can have these as you go forward. So that is really the most important thing to do. But remember, your seed phrase will be able to retrieve all of the keys that you generate. That means you should only use your seed in very limited or emergency situations. And where you need to get all of your keys, 99% of the time, you will not need to touch your seed phrase at all. So that's very, very important. Second thing, best practices. Rule of thumb, don't go overboard. For most people, the simplest and safest way is to use a hardware wallet and always keep backups of your seed. I'll repeat that. Always keep backups of your seed. The last thing you want to do is have your seed written on a piece of paper. You put that piece of paper in your pants, it goes in the washing machine, destroyed, gone, boom. It's happened. Believe me, it's happened. So one cup does not cut it. Now, if you want to get more sophisticated, what you can do is you can use multiple wallets that manage different keys that's all tied to one seed. So if you want to use multiple seeds, then don't use more than 5 seeds. Anything more than that is unnecessary for most people. And always keep one seed for cold storage and never use it for anything else other than that cold storage. You never use it for hot wallets like we just discussed as we go forward. So with that, we hope that helps guide you. And we need to do more about this in self-custody. I need to refresh some of my past videos. Next question is from VTAC. I've recently seen the option to loan out your shares on Fidelity, paying 4.5% on MicroStrategy and Robinhood. Is it safe? So this takes us to the world that we just experienced. So first of all, when you look at exactly what's going on, the big part behind this is understanding what they are doing. Okay, so first, clearly, the interest rate comes from rehypothecation, but the risk profile is very difficult to assess. So in the fine print, it says that you are forfeiting SIPC. However, Fidelity also says that they are fully collateralized your loan value. But that is a little bit scary, especially after what has happened recently with so many CFI type companies. So rehypothecation is risky. Again, like we said before, never put all your eggs, never put 10% of anything in anything that has any type of risk. We've always said that from the very beginning. Now, with Fidelity, Fidelity is obviously much more trustworthy, therefore less risk than Robinhood, which is the other alternative. But remember, rehypothecation always has risk. You get paid for the risk you take. Is that 4.5% or 6% or whatever you get? Is it worth it? Is it worth losing, even in an unlikely scenario? And remember, the other key point number 3, is understand what they're doing with it. Are they taking your MicroStrategy so they can short the hell out of it and bring down the price, which may not be good for you as well? So think about that too. And always read the fine print again and again and again. Never has that been more important. I know it's tedious and boring, but it's worth it. And that typically, if you do read the fine print, most people walk away because it's kind of terrifying. So next question is from TS Architecture. This is a tough one and also a very philosophical one too. And are there any trade investment plays where everyone wins? Does there always have to be a winner and a loser, i.e. zero-sum game? So this is a tricky one, and I'll try to answer it as simply as possible. And of course, you could debate this till the end of time, but let's just do it at a high level, simply to understand where we are. So let's talk about the stocks and companies first. So investing in stocks and companies, the answer is yes. It's pretty much a zero-sum game. Whenever you are trading stocks, there's somebody on the other side of the trade. If you were long and somebody is short, if you are buying, somebody is selling, and that is the nature of the beast. Now, the other thing to understand, though, is sometimes that there is value creation over the long term. So, for example, you could have bought Tesla at $38 3.5 years ago. Now it's worth $880. That's value creation. If you bought and held, everybody who is holding, the value goes up. So you could argue there is value creation, but if it's kind of short-term trading, it is a zero-sum game. Now let's talk about investing in options and futures. No, options and futures are designed to be zero-sum. That's how these market makers make them work. They either make money or expire worthless, and therefore either makes the buyer happy at the expense of the seller or vice versa. But they still have the uses to hedge risk and to be able to stay in trades and protect downside, get more upside, etc. So that's very important. Next one is bonds, investing in bonds and governments. Who wants to fund their government? Well, you do already with your taxes, but that's a separate issue. Now, unfortunately, not anymore. Ideal real world would reinvest in its citizens and be fiscally responsible, balance their budgets, not devalue the currency, not print money to infinity, all that type of stuff. But that's not the world we live in. So basically, if you look at let me zoom out for a second. The 10-year bond rate is now yielding like 2.7%. 2.7%. We know inflation is somewhere between 9 and 14%. Does that sound like a good investment to you? Nope, but people still buy them. I don't know. But it's not the world we live in. And when you buy bonds, you're buying debt that will never, ever be paid back. And when we talk about the Cantillon effect, the people closest to the money printer, the elites and the richest and the politicians, etc., they are the ones that enrich themselves from this whole investment. So that is basically, no, that's not a good one to be in. And next one is investing in Bitcoin and crypto. Well, this depends on the crypto asset. When you invest in Bitcoin, you are typically selling fiat. That means if fiat is going down versus Bitcoin, you are winning, but those holding fiat are losing. Sadly, the vast majority of the world is still on the fiat system. And until this changes, most of the world will always be on the other side of the Bitcoin trade. So no. Now, let's talk about Bitcoin for a second. Is standalone Bitcoin a zero-sum game? Yes, if you denominate it in Bitcoin, it is a zero-sum game since the total amount of tokens remains pretty much the same. That takes us to miners. TS Architecture, you asked a really hard question. So, is Bitcoin mining a zero sum game? No, Bitcoin mining is not a zero sum game. It's a value creation game, like holding on to Tesla long term creates value. Boom. Miners compete against each other, other miners for the same Bitcoin, but the amount of mining that takes place has an effect on the value of those Bitcoins. So it's not a zero sum game. So see all the different pieces together. It's getting tricky. So you asked the question, what can we do where everybody wins? And our thesis is investing in people. It's a win-win for everybody. The best people to invest in are yourself, your family, your friends. Invest in what you know, what you believe in. Invest in the groups of people who you know best. Go out and share your skills, share your knowledge, mentor somebody. Maybe they mentor you back in another different way, etc. And make a difference in someone else's life. That is a win-win for everybody. So, in our opinion, I did say it was a philosophical video today. So next question is from B. Rye. I have a 401k through my current employer. They'll only allow investing with mutual funds and unable to remove or transfer funds to self-directed IRA. How would you recommend investing? Well, you know my philosophy. My goals are not your goals. I never believed in working till 65 and then being able to cash out my retirement fund. That was never my plan. So it depends on what your plans are. If your plans are to work till 65 and collect a pension, maybe it's good. Maybe they have one or two good funds in there, but I cannot tell. If you are in a small or medium-sized company, 401ks can be bad because there is a revenue share, i.e. commissions. There's high administrative expenses. There's redemption fees to withdraw, but you said you can't even withdraw or transfer. And there are often crappy fund choices. Remember, it's there's a whole food chain of people that need to be fed from selling these 401ks. And when you've got limited options, I don't know, it's not a good thing. And there are many people that believe 401ks are a ripoff, they're a Ponzi scheme, etc. But used correctly, if your employer does contribute, say if you put in 6% and they put in 6%, maybe you can make it work. Maybe it's worthwhile. Again, it depends on your long-term goals. But what I would probably recommend is determine a certain amount where you can opt out. Instead of giving 6% to the 401k, maybe do 4% and keep 2% and direct it yourself. Set up your own IRA or buy Bitcoin or whatever, disruptive assets, Tesla, use a brokerage account. That's kind of what I would do. And that's what I've done all my life as well. I found that trading my own money is better than sitting and getting 6 or 8% from a mutual fund. The other thing as well, I got to quote Saifuddin Amus here, and I always talk about blazing your own path. He says, Bitcoin is the cheapest way to buy the future because Bitcoin is the only medium guaranteed to not be debased, no matter how much the value rises. Da-da. So deep one today and great to finish on Saifuddin. Now, before we jump into live questions, these two are in honor of Sayad, our valued Patreon member. Thank you, Sayad. And your video was so cute with your dancing bird. So as you know, every week we sponsor some folks. We have Lollipop here, a cockatoo that dances to upbeat tunes. Sayad, Lollipop is like your bird. And Bingo, a Panamanian Amazon parrot that greets people upon entering the room. And these birds live till over 100 years. They need a lot of love and care and attention. So if you learned anything today, hit the like. If you haven't subscribed already, this is where you come to learn the most per minute anywhere. So big thank you. And a thank you to the mods out there for keeping us safe. Let's go to some questions and see what we got. And I haven't even looked at the market here since I've been going live. Yeah, we still have the Bitcoin hovering around that 23.8 level, just under 24K. But remember, Sundays can be volatile. So let's jump into some questions. Brandon L., what do you make of Solana making commercials? They've been hitting this platform quite a bit lately. I have Amazon Premium, so I don't see ads ever. But I've heard they have opened a store in New York. They're selling sneakers and they're making ads. You know, they're using very little of their money probably to do this. I haven't dug into it too much, at least the store thing. The store is a precursor for them launching their mobile phone on a path to $1 billion. But as I always say, good stuff shouldn't have to advertise itself. I've always said that. I stick with that. So we'll see where all this goes. But I don't control what Solana does, but I will look more into it and see what I can figure out. Scoobs 25, a whole coiner from July 21st. Doldrums, well done, sir. Sell when she gets 30K for the retest of the low 20s, or just hodl till she breaks 100K. Yeah, there's a lot of people talking about Bitcoin going to 30K, then 40K, then coming back to 25K, and then going to 100K. So think about that. Again, if you are a trader, you could have pulled $700 out of your Bitcoin in a few minutes an hour ago. So think about that. I do believe the concept of diamond hands and just hodling, proven to myself, it's, you know, it's costly to do that. Play the trend, play the mean reversion, watch your TA, watch your taxes, of course. If you can take short-term capital gains because you got some short-term capital losses, you know, trade it. But it's really, really hard to say. I do believe, again, my bear case for 2030 is 500K. Bitcoin makes moves when you least expect it, and it can go from 30 to 40K in a heartbeat. And you just need to make sure you're on the train when that happens. That's what I kind of stress. But in the meantime, when you get quiet periods or little volatile dips that are in tight ranges, then it's worth trading. But don't expect, if you do go to 30K, might go back to 25K. But remember that ascending channel. Things are just getting higher and higher all the time. I don't see us going back to the 17K. I think it's highly unlikely. Not probably less than a 5% chance. And if that does happen, it means something is broken in all the markets. So it'll be a nasty time. But as Sam Bankman-Fried said, all the liquidity is washed out. As I've been saying for over a month now, the bottom is in. When we got the news last week about the Fed pivoting, it's rocket boosters time. So August is quiet though. Remember, August is quiet because there's very little volume. People take vacation. So just watch for that too. But hold on to that whole coin. And sorry, Scoobs, very long-winded answer as you generate all these thoughts in my head. What you could also do too is hold a chunk in your hodl bag, maybe 70%, 80% that you don't touch. And you can play with the 20%. So if it does go to 30K, sell a fifth of it. Hope with dips. If it shoots to 32K, buy back in and take the $2,000 hit. That's one alternative as well. Not financial advice, but a way to play. SPT 58. If Ledger went bankrupt, could I access my crypto on another wallet? Trezor. Yes. If it disappeared, you can definitely do that. I don't know the exact process, but once you have your seed phrase, you can reinstate your crypto in another wallet. So not a problem at all. Artem, can Bitcoin reach 50 to 55% market dominance? And if so, would it be possible to see another leg down for alts only? Yeah, as you know, I've had my own theory about Bitcoin dominance for a long time. And basically, if you rip out the stable coins, it makes up 13% of the dominance. You rip out ETH, you look at the alts, is actually a very, very small percentage left. So I always believe Bitcoin dominance would be between 39 and about 42%, 39 and 50%, I think it is. So that 10, 12, 13% range. I don't see 55%. Also, people believe that, you know, Bitcoin is the same and Bitcoin dominance is the same as it was in 2017, 2018. Remember, all of the other cryptos back then were very infantile. They didn't have real use cases. Now they do. So, you know, people are talking all the time about ETH flipping Bitcoin. If it even gets close, if the ETH to Bitcoin valuation gets to 0.15 and the ETH Bitcoin chart, you know, there we are. That's already kind of close to flipping it. And who knows if that could happen or not. So I don't know. I just think the alts are too popular. And also the other thing that I've seen over the last 5 or 6 weeks have really stunned me is I thought all of this contagion that hit the crypto market would cause people to ditch all of their altcoins and never degen again. That's not true. They're degenning as bad as ever before. So people still hold garbage coins. People are still FOMOing to stuff. So people have not changed. So with that, 55% Bitcoin dominance, I don't see that happening. And alts are going from strength to strength right now, and they're all outperforming Bitcoin. Just look at the Bitcoin ETH chart over the last couple of weeks. Mths, where do you stand on Bitcoin halving and its impact when we have bull and bear markets? Do you think we are still following the cycle? No, I think, good question, Mths. I think the impact of the halving is having every cycle, so it's becoming less and less important. I also believe cycles will ultimately break down, and I also believe cycles happen faster. Risk happens fast. We saw the contagion happen fast. Markets fall fast, but they also rebound fast. Remember, there's a lot of things in control right now that aren't like in the old days, like algos, bots, traders, retail investors. Everybody can jump in and jump out real fast and hedge too. So from that perspective, I think, bear market, we're coming out of it. If you look at the number of days from the November top to where we are today, it's about 250 days, which is about the average duration of a bear market. So we will chop a little bit sideways, but we could start ascending higher, is what I see. And then as things get closer to the halving in 2014, what I believe is everybody's going to front run the hell out of the halving because they've seen it too many times. So they're all going to jump in mid 2023 and just that's probably when the next big move up will happen, which is 9 to 12 months from now. That's just my view. I could be wrong, but that's what I see happening. IROC 007. If the Cybertruck has a strong steel exoskeleton, you were listening to my video yesterday. How will firefighters and SWAT cut out and extricate you of the vehicle if you get into an accident? Didn't think about that. It says bulletproof glass too. I'm not sure. That's actually an excellent question. It's steel. It can be cut with an axle grinder, but you're right. But I also do know that the top 3 safest vehicles on the road today are Model X, Model S, and Model Y, I think, or maybe Model 3. The top 3 safest cars you want to be in if there's a crash. I can't remember the ranking. I think the X is the safest. And the Cybertruck will be the safest above all of them as well. So it'll be by far the safest car. And I'm sure they've thought about that. But you made me think now as well. There's not even supposed to not even be door handles on this with bulletproof glass and very hard steel. But I think no matter what happens, though, you can always pop a door open or a window open with a crowbar. But that's a really good one. I'll have to dig into that. You have me. You stumped me. Thanks, IROC. Charles Kincannon. Will you have new stock ranges from MicroStrategy, Tesla, etc., and an updated return? Yes, a lot of people have been asking for that. A lot has changed in the market. We're beginning to see the difference between the winners and losers and the safe plays versus the ones that have kind of survived that weren't that good last year, but are now very good this year. So yes, more on that. Tesla, I thought Tesla was going to go back down to the low 700s. It never made it, as a couple of things that hit, like a tax credit in the United States, part of another big money printing bill that they're going to do. Of course, free dollars. Why they give tax credits to a car that can't be made fast enough to sell is stupid, but what do I know? And then MicroStrategy. MicroStrategy right now is kind of undervalued in its. I have a MicroStrategy Bitcoin pair, but I'll do a video on that as well, and I'll update the others too. So thank you for that little nudge. And Courage the Cowardly Dog. Is the country of origin of L1 crypto projects in any way a criteria to your investing decisions, e.g. Elrond from Romania? Yes, it is. I like one of the key factors I look at when I look at a chain is I look at the leadership, the management team, the CEO, the figurehead, whatever. Can you trust that person? What is their background? Where do they come from? Do they, fib about certain things? That's really, really important. Elrond was an interesting one last year, but it's just, has some really good things going for it, but other things that are kind of dinging it. And I don't know the team that well, but you've got other people. The head of Avalanche is from Turkey, I think, and other places. So it doesn't really matter as long as those people can be trusted. But who would have thought, basically in today's world, you can't trust anybody, but you need to. Easy way to do it is dig into their background, find out what makes them tick. Are they in it for the money, or are they in it to make the world a better place? And that, for me, is the special sauce. So if you can look at the leadership team of any L1 and determine that they don't care about money, but they care about making something or leaving a legacy, that's who you want to back. That's a huge part of the score when we score our L1 chains here. And a big thank you for your stickers, Dogwan, St. Jude Nidas, Glenn Johnson, Gooby, Sleepless, Java, how are you, buddy? AC1, Green Candle, and Richard Alvarina. Thank you all, everybody. And Robert Stefik, really appreciate you all. Hope you got something from this and learned something new. Who's again a weird philosophical one today, but we just answer whatever you guys ask. So appreciate you all. Happy Sunday. Take care of you and your loved ones, and I'll see you all tomorrow. Thanks all.